Good weekend all. Ira Epstein of Linn and Associates with your Metals Market Weekly Edition for this Sunday, and we are now at the 11th of October, 2020. Now, I intend on getting back into putting these out as early as next week, but with 80 degrees in Chicago over the weekend, there was a lot for us to get done before the fall sets in, and set in it will. But when we take a look at what we've got here on the monthly gold chart, you still have a pattern of higher lows, higher highs. You'd have to take out 1843 to negate that pattern. There is a bit of divergence in that the market is seeing the slow stochastic study on a monthly basis turning down. Notice how the red line has dropped under the blue and now it's back under the 80 level. So it's not clean sailing for this market. Whereas evident is on the weekly chart, that challenge that we had of the 18-week moving averages has held the market, and that's often what it does. Why? When markets come back, one of my theories is whether it's a daily chart or a weekly chart, could be even a monthly. Often, the market likes to get back to a neutral moving average because so many people follow moving averages. And from that zone, it tries to figure out what the next phase is. So as they take a look at the weekly, certainly if you close back under this low, there's a problem in the gold. But this is a weekly area chart of just closes. Now let's go to the regular bar charts for the weekly basis. As you can see, the market's been coming down. Now, we had been in a pause phase, and I think you'd agree with me. You can almost see how the market had an up line here or a down line here, and the market decided to resolve with a breakout attempt to the downside. It's had a bit of a bounce so far. That's the best you can say about it. What do we have on the weekly basis? We still have lower highs, lower lows. Therefore, the trend is still down. Where's the market in relation to the 18-week average of closes? Well, it's over it. Therefore, the bias of the market is up since the market's over that with the swing line down. And again, I'm going to repeat, when the market falls, it often likes to fight that battle at that 18-week. And you can see just what's going on. 3 weeks in a row of doing it so far. What will get the market going to the downside is if the market gets under 1843, in my opinion at least. You not only have continuation of the lower highs, lower lows, it would be the first attempt under that and put into play the potential for a lower Bollinger Band. That's if it can do that. Let's assume it can't do that. If the market can't do that, what's been happening is while the momentum is down, and remember, I believe momentum leads price, not price leads momentum. If it can't do that, you're going to see the momentum start to flatten out and more battle at this 1879 level. What about turning bullish? There's nothing on this pattern just now that can turn it bullish, with the exception that you get an outside week. In other words, you drop under this week's low, but you don't get under 1843, and then you reverse up. That's the only thing I see on the chart that could be bullish, because that would create an outside week to the upside, putting the market still over the 18-week average, higher lows, and then higher highs. It hasn't happened. It's the what-if scenario, and don't read any more into that than that part of it. The gold-silver ratio has been in a correction since the 67.30 level. It's come back up in the neighborhood of, 15%, 20% off that low in terms of just a bounce in the market. Okay. When you look at silver, like the gold market on a weekly chart, you fell, went back to that 18-week average, and for 3 weeks in a row, you have been fighting at that number. Should you get under 21.96, that would confirm more of a down and possibly put into play the lower Bollinger Band at 250. In fact, it's down here, 1563.50, but I don't think that would be the main number. It would be the 1740 level. I am not saying that's going to happen. I am saying the market has found a zone, both in the gold and silver, that the battleground is at. And now we have to wait and see, do either want to come alive? In the copper market, you have a pattern where you got to bounce. You have a higher high, lower low, right into that 18 weeks. So what are we seeing in the metals? We saw a break in all of them. We know it was Golden Week in China. The traders were out until Friday. The market sold off during that period. Copper especially had a hard break to 283.45, and it's suddenly back up 20 cents as soon as they came back from their holiday. A pretty interesting week, if you ask me. Then we get to the platinum, which can go either way right here. Let me explain this. You have an outside, you had up here, up week, and then an inside week. On an inside week, you still have the pattern of lower highs and lower lows. The market is under the 18-week average of closes. It's fighting a battle, and it has been for 3 weeks, in the neighborhood of the 100-week in the green. If it decides to continue down, 779.60 is a number that can be had. What if, and I'm giving you all the scenarios on gold, silver, why not this one? If you don't take out 821.30 and you just get over 908.40, just getting over it, you get an all-out buy signal. Why? That gives you higher lows, higher highs over the 18-week average, a market that is corrected down enough where if it starts turning up, you can get a thrust. So that's my viewpoint on what that market's doing. In the dollar index, all you've done is a rally back up to the neighborhood of the 18-week average of closes, and you ran out of momentum to the upside. You were pushing during that time frame, and you can see this as that correction happened. The market had come out of an area down here, it had put in an up thrust, and all of a sudden that up thrust is in question. This market could be pushing down one more time. Remember, on the slow stochastics on weekly, I don't look if they're overbought or oversold. They're either pushing up, pushing down, or neutral. This is a market that, instead of the uptrend, has now pushed itself back to neutral, and with much of a decline on Monday, could actually begin the process of declining back to the downside. Take out 92.75.5, and traders will be talking around this 9100 level. So you put that all together, you see what the quotes were here. They're not up because it's Friday, and I want to remind you what I do. Whether you trade ETFs or futures, I put out subscriber videos that are very different from what we're watching here. Those videos, the futures come out, I start recording actually at 5:30 to 5:40 in the morning Central Time. It's posted right after, let's say 6:15, 6:30, that time zone. By the time I record, render, and post, there's no editing to speak of. For the ETFs, I do those at between, let's say around 4 o'clock in the afternoon. They tie together. On the ETF, I know that a lot of people want to buy GDX. They want to buy the different miners. They want to buy what the market is doing, but they don't want the futures. Not a problem. I cover all this in great detail. This weekend, I put out a lot of recommendations in the miners out of Canada and in the U.S., if you're interested in that. We know that we're only 3 weeks away from the election. These things tie together. You can try these as a combination for $16.90. All you need to do is go to our website under the word research. It tells you how to do it. You can get the separate ones too. This is the combo offer. You can separate them for what you'd want. It's getting interesting. Traders are now back at their trade desks around the world. This is going to be the time to be looking at these markets. The one thing you're going to get, a lot of volatility. I'm Ira Epstein. You have a great weekend. I'll see you all on Monday.